The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday, the 26th of September. The Dow is up 283 at 46,229. It hit 46,353, pulling back a little bit here. And what's really important about this is that inside track repellent zone at 46,714, the all-time high, did pull the price back. But look at this. That 9-period moving average is still very strong. I'm going to just keep switching over to this right here. Let me see if I can do that. Is this the one? Yep, this is the one. So you've got a peak E in the 1 minute chart you see, and you're pulling back very sharply to 200-period moving average of 65.75. Most importantly, let me just show you this chart right here. There it goes. In this particular chart, what I've got here is the 9-period exponential moving average. When it goes above the 14, it goes green. When it goes above when it goes below the 9-period moving average goes below the 14-period exponential moving average, it goes pink. And what I'd said is sometimes, and in fact this year, usually I'm going back decades, but sometimes it takes a while for the top to register for the 9-period moving average to turn down and then cross positive. It can take up to 2 weeks sometimes if there's no bad news, but the bad news is just filtering in. You have to wait. So we took a little insurance policy yesterday, short the we are long, the 3 times long the small position in the Dow, but we also took a very small position in the 3 times short. But I had a really tight stop. Why? Because if it did manage to push much higher, it would suggest that this is unfolding and it could go into next week before we actually turn down. So let me expand this a little bit here. This is the daily chart, and all you need to do is to look at the green line and say, oh, okay, look, and how many times since the April turnaround where the 9-period moving average crossed positive, we've been long since then, has this gone pink? Just once. It was that dip into August, the August 1st, I think it was. Yeah, the August 1st low. The 9-period moving average still went pink and stayed that way right up until the 13th of August. Remember, Technical Friday today, so I'm going through this to explain methodology and why. So the question came in, what's a good point? What's a good buy point for NAT, which is Nordic American, I believe. So look here on the 9-period moving average, using the same technique, the 9-period moving average is still positive, yet the price has gone down. And has gone down for the first time below the black 14-period moving averages since the rough period of July into August. So I'll go back to that in a moment. Right now, it's suggesting that there's a chance that if it pops up one time from 321 to 330, somewhere there. So that'll be somewhere in the 330 area. That's not very far. It's only 10 cents. All of a sudden, that 9-period moving average is going to go higher. So, okay, let me go back to this. Now, look at the S&P. The S&P, just steady. It hasn't even gone pink once since it crossed positive back in April, on April the 28th. This is just one tool. This is an amazing tool. Thank goodness I've been using this way more and believing in it way more, and it's really helped subscribers. Now, here's another thing. So the S&P right now is up 20 at 66.25. The QQQ, using this as one indicator, the 914, I could use it as just one one line. I prefer to show how it holds above and then it holds below. Well, I'm sorry, the QQQ. This one went for 2 days from the 3rd of September to the 4th of September, it had a whole day pink. Otherwise, since the low back at 470 on the 25th of April, here it is at 593. Now, would you have got taken out? You could have got taken out there, but there was no real push to the downside. So I suspect that if you were in it, you'd still be in it or taken a little bit off. So isn't it, this is nice. The IWM, Russell 2000. Look at this. It did from that April low, it went all the way and crossed positive back on the 28th of April. They said about 196. And then you would have had to get out here because it was quite a few days pink, but it didn't take out this left side low. I would have said, got to hold that left side low. Next time it takes it out, you got to get out. But in the meantime, so you would have been out at 216, and you would have been back in at let's say 222. All right, and now you'll still be in at 240. So I just wanted to show you some of these things. Look at gold. Gold, it's just acting so well until it really trades here at 36.30. You would have to even go lower than that to get that green 9-period moving average turn pink and say, whoops, you got a sell signal maybe into a sell mode. And this is the daily chart. Look at silver. And gold right now is up 32. Look at silver, up 0.77 at 45.88. I keep thinking, silver, yeah. Look at this. It's really strong. I mean, we're still holding our CDE, core mining. I can't believe it. Look at this. Lately, it hasn't even touched the green 9-period moving average, let alone the 14. I think when this turns down, you've got to be real careful because it's going to have to be real bad news. And if there's really bad news, then this could make some kind of a top in the daily chart of some consequence going for about a couple of weeks maybe, or 3 weeks maybe. Who knows? Or maybe even a 5. I don't know. But at this point, this is amazing action. We were talking about yesterday, Tim Ord was talking about AEM. Look at this. Since the July turn back to the upside green, and that was at about 120. Here it is at 162, up 252, and it hasn't broken the green 9-period moving average. So let's go back here for a moment. I want to just take this for a second. Yeah, so you see, there's your peak E. When you start off early morning, I missed it. I knew there was an issue, so that should have been a C, not a B, right there. So it's a C. So the 5 and 10 minute charts can fail. They don't often fail at a peak C or less than a D in the 10-minute chart once they go much higher. But this also activated the 8:30 sharp move to the upside. So now I'm taking the 1-minute chart for me is priority at this particular time. All right, I want to get out of this and I want to show you something very important. So here's the Dow pulling back from the intraday high. We were just stopped out of the short position. My thinking was I would like to hold it because if there is a kind of meandering sideways digestive phase going on until we get the bad news, and maybe it's later next week, who knows, I would like to have been in position, but at the same time, this is such good action, even if it pulls back here, the 9-period over the 14. I'll be right back. Basil Chapman, Tight Conditions Hour, Dow's up 260.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, folks, we're back. I'll be right back there where we were, and we'll be looking at Nordic American tankers. I just wanted to show you one of the techniques I use is the bar symmetry. And if you look at this arch formation in the 1 minute chart, it went to a peak D and then it made a trough. And I like to use that trough sometimes, the little cup formation, as a possible plumb line for a move right here to the same number of bars to the right. Well, it did that, and right there. So it goes from the left. This is at about 932. It goes from the 66 area, goes all the way up to the 6703.75, comes back down, and here is the test. But look, remember we were talking about this 914? Well, look how bad the 914 is. And look, it's under the 200-period moving average. And that says that it'll take the effort to push back up again. And if the 914 can cross positive with the MACD histogram going positive and the stochastic at 17% moving up, that's when you'll get a reversal towards the 6684 level. But it has to do that. And right now it's struggling. So I just want to show you techniques that I like to use. So this says that was the support that had a hold. It did hold. It was successful. And it says if there's a bounce, then the left side cup will be the target that you want to look for. And that's one right there at 6680.75. Remember, this is Tactical Friday. I like to give some, educational aspects to the Chapman Wave methodology in this particular session. Now let's go to, and the other thing, sorry, I should have said, now if there's a failure because that 914 is so weak and the MACD deflects lower, watch out, because if it decisively takes out the left side low of 6665, this is the 1 minute chart, because the 6668 is the 200-period moving average support in the 5 minute chart. So we go one step at a time. So 6668 will be the support on the 5 minute chart. Takes it out, you watch out for, because 6665 below that says, now it's going to be a struggle for at least the next hour. All right, let's get back to our story. And our story is Nordic American tankers. Now I'm going to show you this is exactly the same process that I'm talking about as I showed you with a 9-period moving average, and I mentioned yesterday, even though we went short, it was more insurance because we have so many longs, and I needed some protection. And it looked like the Dow was starting to weaken a little bit, just a little bit. It actually pulled back 1,000 points. It's not a big deal, but it did pull back 1,000 points. So look at Nordic American Tanker goes, NAT is the symbol, and it goes from the 200-period moving average, the 914 crosses positively, and then the MACD crosses positively, and then the stochastic ran. And that's usually a very good sign. And when the 9-period moving average, this green line, is so strong, I always look at it and say, okay, I've got a peak D. I can put a down arrow, but I really should wait for a couple of closes below the 14-period moving average. Otherwise, that 9's so strong, it's going to move higher. Well, let me just keep your eye on this one on the left. I'll show you right now. Look, here's the Dow. Look how it also went to a leg D and then a peak D. 9-period over the 14. So this is why I said, I can't put a down arrow, but technically, why are you shorting? Well, I was shorting because of other things. The MACD was weak, the relative strength was weakening, the on-balance was starting to pull back, the stochastic went under 80%, and look at the way it got repelled from the inside track repellent zone. And now it's given back quite a bit of the gains. It's up 188. It doesn't sound like much. It sounds like much, but it's actually, considering that it was at 353, it's now at 136. That's quite a bit of a pullback, right? It's over 200 points. Now, so I'm looking at this and I'm saying, so I made the stop quite tight. So we're out of the short position. My thinking was that I can't put a down arrow. And you really want to, unless you think you're going to get the exact short position, that break to the upside that failed. That was the moment that I should have shorted right there. But I didn't like to do that for subscribers because we've got these positions. Actually, 3 days ago, I said, wouldn't it be great if we could actually freeze in today's action? Just freeze it and say, okay, I don't care. You can go up as much as you want. I don't care. I don't want you to go down very much. And I'd like to come back in 10 days or something, or maybe in a week or two, and then activate the account, but it doesn't work that way. All right. So now let's go back to natural gas. Sorry, not natural gas, Nordic American tankers. So I had a down arrow. I don't think I did this here on the show. I was doing it for myself, and I said, yeah, let's just see. Well, this is D. The next high is E/A, or if it didn't take out this low here, there would have been A. No, that's not. So this is an A or an E. This is an F or a B. And this is a G or a C. And that's where it stands. But there's a really strong, when you look at the weekly chart at leg D, twice it hit it and it's pulled back from that. There's a really strong probability that it's digesting. But the strength of the weekly chart and the strength of the daily chart suggests that I need to put in some kind of a floor. And that floor is right here. So I'm going to go to there, and then I'm going to put in an equal number of bars to the right. So there's an arch formation. And let's just see what happens over the week. Because I would suggest to you, and I thought, Peaky, that you actually were, you did say add, didn't you? I can't see now. Basil, what is the buy point for for Nordic American tank? I thought you were in it. Okay, so I'm going to suggest to you, hold off just a moment, because if this is going to turn into some kind of a arch formation, and it's done very well for quite a while, then I would be looking at 314 to 310. Now, I'm going to just clarify those numbers in a moment. Oh, I forgot to put that in. Sorry. Whoops. Yes, I'm going to stick with this. So this low right here, which is at 315, and you're trading right now at 321, down just 1 penny, that's what I'd be watching. Why? Because the 9-period moving average is narrowing a little bit, but it's still positive. When the black 14-period moving average starts to tilt down, and the green gets closer and closer to the black line, that's where you think that, now it should start to go to pink. And when you've got these technicals, so I'm saying that's the first level. And all I'm going to do here is I'm going to lower it. If that is taken out, so the major important support level is this low right here on the 12th of September at 3:15. Why? Because if it takes that out, that has to be a G. It can't be a C because you've broken your starting point, the buy signal, right? So as I'm looking at it right now, what we're looking at is we've got that 3:15 to hold. If it takes it out, the next really important level is 3:10. Anytime in the next week, if it takes out 3:10, it means it's a longer duration. Nordic American tankers, that's oil shipping, I believe. That's what you have to watch. I'll be right back in a moment. Let's just see where the E-mini went. Yep, it broke down, and it's below the 66. Now it's at 66.59.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Folks, so let's just get back to this. So I see you're in it. Okay, I thought you were in it. So you want to add to it. I'm just going to say have patience because it's acting really well. But if you're going to add to it, I would prefer that you add on a pullback so that you've got a little bit of leverage. Why? Because the way it's arching over and it's in an area that actually should be doing this chart should actually, it's not doing badly, but I think I'd be looking at it more at 345 than 321 right now. So something says to me it just needs to take a breather, and so give it a little time. But we're only talking about 20 or 30 cents it might be in the end, but I do think you need just a little time. I like it a lot, but if you're already in it, I don't think you need to rush to add to it. I prefer that 320 to 320 to 2. That's too much. Yeah, let's just look at it again next week. But I would suggest that if it tests the 314 area and then takes it out, you're going to wait a little bit longer. And it might not be much in points because the weekly chart is still so strong. I promised myself that I wouldn't forget to open these up so that you can see the big picture. Look, there was a peak D way back in October of 2024. That was up in the about 480 area. Comes down, tests the 200 period moving average. Good, not so good. Now it's resistance. Oh, it broke above and then whoosh. And now it's the first time it's testing the 200 period moving average again. The rule of thumb is as it gets closer, it'll pull back. And then eventually the closer it gets, the more it becomes a magnet. So the 335 area is really a magnet. So I don't think it's going to go too far down. If you want to split a new entry, you could just go 1/3 of that particular add-on that you would put now. You could do that now, thinking, well, 6 cents, 7 cents, because at some point it's going to trade above the 200 period moving average. The way it's acting right now, this cup formation suggests that it should go into this ugly candle right here, which has a high of 359. Oops, it has a high of 365. All right, hope that helps you. All right, next question came in. Oh, now let me just continue what I needed to do. I need to put this back again, right there. Okay, so let me just run this through. I want you to show you the GDX. A lot of people are talking about GDX. Gold is making some kind of a I've even heard some people talk about gold in relation to the dollar, which has given back some from yesterday's big gains, helping the weekly chart improve. I haven't yet wanted to go back into the dollar. We were back in 2018. We got out earlier this year when it started to pull back. And I said, no, we're done. If the theme for the administration is lower dollar, I don't need to be in the dollar. All right, so let's just go back. So the dollar's got a lot of work to do. The 9-period moving average in the weekly still has to cross positive, and it hasn't done that. It's going to take a move, a closing price in the weekly chart of about at least tag 100. Maybe not so much. 99.60. And it's trading at 98.28. Doesn't sound like much. Believe me, the dollar can, when it struggles, it can struggle a lot. So let's just go back. Here's the GDX. GDX, this weekly chart with these candles is suggesting very strongly that, not the monthly chart, because that is not telling you not telling me anything yet, because all the technicals are very strong. But the on-balance volume in the weekly chart is suggesting, just like it did right there, that gold could have a little bit of a pullback in the daily chart. In the weekly chart, it's getting to that point. So I'm going to suggest to you that the gold, and I'm going to do this in the daily chart, 76, in the 76 area as resistance, but if after hitting 76, it actually starts to move down, and the down actually takes out, let me do this. There you go. Actually takes out the 71 level. That's a big move from 76 to 71. But if it does that over the next 2 weeks, be careful, because then it's saying at best there's a sideways consolidation. At worst, all these candles down to this one here, the candle of the 18th of September, and that low is 67.28. That would be my target. Now, that would be my target to say, that's it for gold for now, or, wow, now we can see another big move in gold. But at this particular point, it's starting to look a little toppy. That's the GDX, I should say, not the gold. That's the GDX, the gold minus. Let's go to gold itself. And that's a very strong candle, up 38. So, wow. If there is concern, let's just say there's some concern about the government shutdown, whatever it is. Gold, if it's an economic concern, I think gold is going to hold very well. And that's why I'm saying sideways, maybe at best. It could even go at best GDX. Gosh. Ooh. Yep, the MACD just deflected higher. The relative strength is still good. Stochastics at 81, good. On-bounce farms just had this little pullback. 9 is still strongly over the 14. Yeah, maybe a little more, maybe to the 77s, I'd say. Okay, so I'm thinking we're getting a little toppy here. Gold is a nice candle today, and I've got this as an E. I don't think this can be called an A, but it's an E, and it'll go to an F and a G if that's the case. But in the meantime, it's all very strong. Okay, silver, something I wanted to do here is silver. Now, this is unusual in the sense that it happens periodically, where silver leads gold for a while, other than just quick weekly or daily sessions. This is a very serious breakout to the upside with barely a pullback. So silver, now, can gold pull back and silver? I don't think that gold can pull back that much. It can. It's done it before. But look at this move. Let me squeeze this. Squeeze. Yeah, silver can still go all the way to the next high, which is, no, it's already taken that out. So that'll be the high of August of 2011. Remember that the prices change. They get smoothed out, but I'll give you the price right now. It's going to be 52.72. And then the major high that was in 2011, back in April, was at 58.31. That's a long way to go. So let's just go back now, and I'll show you something more interesting than this, is that, where did it go? Right there. Yes. So SLV, I had a quick, just to follow up, because someone said, what about SLV? Look at the strong move, leg F. Now, SLV, I don't think it's been around long enough. Let me just check. Don't tell me we've got a break coming up. Yeah, mine only goes back to 2012. So that's what I want you to say. It's fascinating. I can't go back to the, this is the silver iShares, unfortunately. All right, I'll be back in a moment. Dow's up 164, S&P's up 13. Let's see if that gave a nice turnaround signal. Yes, it did. All right, I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, so let me just show you here on the 1-minute chart. Look, we spoke about this, and you've got the nice ictus with the on-balance volume right at the trough. The retro strength turned around, the stochastic turned around, MACD took its time, finally turned around, and you got yourself, this is an A right here. But under it, you've got an A because it's above the starting point low, right? So that also gets called an A. Why? Because that allows you to get to this B, right? Which is, you wouldn't have got to a B there because this is a little bit below that. So now you've got a C. So this looks, and the stochastic is at 95%. That's good. It's above the 200. Now this is your resistance level. And the 9-period moving average crossed over. If the 9 and 14 cross over the 200-period moving average, we can see a very nice move, and that could take you to the 85, 86 level, and then we'll assess it from there. All right, so here's another question that came in, and it's a good question. So this is silver. So I just want to show you that it's difficult sometimes when you don't have not a futures contract, but just a regular ETF or something like that, or a fund that goes there. So the question came in, could I look at ETH? Because it didn't. Let me just go, here's the ETH. So this is what I did, and this is what I do very rarely. You've seen me do it, and I discuss it in great detail. I think about it. I can't just do it arbitrarily. So WH in the Tiger YouTube says, Basil, I believe ETH still has a leg D in the weekly to make. Do you agree this is a good time to start a position? Thanks. So what I'm going to say to you is I look at this really closely, because if I get something that is almost a parallel high and there's a little ictus in one of my technicals at the same time, I say, you know what, I'm going to treat that as a phantom peak. Why? Because if I get to a peak C, and I've miscalculated that there was in fact the potential for a peak C before that, and that was really a D, I could watch this go tumbling down and never get the D, or at least not get the D for a huge pullback. So I only use it in very rare occasions where I have all the technicals and I need to know that that would be a really good alternative. And what I do then is I take something off and I keep a core position. And then I say, tell me what's next. And if it goes to a higher high, I move the D over to the other high, and I put the phantom peak C right where the D was, and I say, yep, I used it. It wasn't correct, but it did help for a little while, but that's it. So you see this weekly chart of ETH. This is a grayscale Ethereum. It went to 36.41 on the week of the 25th of July. Well, the very next week it went to 36.40. 45, 4 ticks higher. Technically, if this is a computerized system, I would have to skip that and say, nah, that's still a C. Leg C goes to it stays a floating ladder until it becomes a peak by having a lower high, and I'd have to wait for that high. So I am ready for it. Now, let me show you why I was very satisfied with that call. Because, remember we were looking at NAT, Nordic American tankers? Well, here we go. Look, I had to use alternate counts here as well, F/B, and that looked like it could be a G, but it could also be a new count. But all the technicals were saying, sideways. You take that out, I have to consider it's a new high, and it'll be G/C going to a D. Look how it turned down. And that just said to me, put it together now with Bitcoin, BTC. Bitcoin made a perfect E, that double top right there. But that wasn't an E. Remember, that was an alternate count because it continued from that peak D for the double. So every once in a while, there's a count in the Chapman wave that just says, you need experience to get it right. There's just nothing you can do. Because if I was thinking that was a brand new B, I'd still be waiting for it. But then what happened was underneath it, the 125,200, you got a perfect peak D with an arch formation that says this is the dreaded H. Dreaded H. Where's my charts? No, it's not that. There it is. The dreaded H is this. Nope. Hasn't. Where have I got it? Oh, here it comes. The dreaded. Somewhere, there's my dreaded H. Uh-oh. Have I lost it? No. Don't tell me. That'll be something. Can you imagine if I've lost that? This is with all my charts. All right, I've got to do something to get it back, but it's not there right now. So the dreaded H is where you pull back and you arch over. Usually it goes to a peak B, but this went to a D, and that was the pattern that I call I needed that. Maybe in the next break. No, there won't be time. You see, this is the other pattern that I was looking at. This is the inverted falling axe formation, right? And it goes up like that. It's an expanding wedge to the upside, and then it takes it out, and then it turns out, and gold is what often does it. But here's Bitcoin, and it makes a peak D under the previous high, so it's turning down. So let me answer your question, because this is something I pondered, because we have the IBIT iShares, and I'm looking at this, and I'm saying, I'm beginning to worry in this weekly chart, and that is a peak C. There's no other way I could count it. To go to an all-time high to peak C, but for this to fail, I'd have to take out this low right here. This low, which is at 79,120. That's the low of April. So I have to keep this as a C. So to answer your question, I'm very concerned about Ethereum. I'm very concerned about Bitcoin. I've been talking about this since the August high. I said, I'm not adding anything there. If anything, we might have to take some more off. So I'm saying no. If you're asking my opinion, I have to say, even though Ethereum's at a better chart than Bitcoin, I'm kind of worried about it, and I'm just going to say to you, I'm using my Phantom Peak C to say this made a D. I cannot do that with the Bitcoin, but whatever it is, I'm a little nervous about Bitcoin. I hope I'm wrong, and that's the way I'm looking at it. Hope that answers the question. Next question came in. Whoops. Just quickly, Tesla, TSLA. Yeah, Tesla's in a digestive phase. 444.98 was the high. I like this, and this is a legitimate leg C in the weekly chart. The technicals are very, very strong. I'm anticipating it does go to a D. There's the stopping point. This is called the Chapman wave inside wedge target repellent line right here. There's a particular technique I use to get to it, and it just says that there's a good chance that by the week of November the 7th, Tesla gets, but by that time, it gets about 488.54. Hope that helps you for the question there. Let me see if I've got time. Yeah, I do. FXI, that made a peak F about 7 sessions ago at 41.63, and now it's pulling back. There's the little there's the one dreaded H right there, failed. Here's another one, hasn't failed. But if FXI trades under 39.50. It's going to take a bit of a breather. All right, got that out the way. Oh, there's the break. Okay, now I wrote down a couple of questions. Oh, General Motors, just as we go to the break. Remember I was saying how I like General Motors action, had a round number 60 recently. Here it is, up 33 cents to 60.92. Is this telling us that maybe rates will come down? I like this chart of General Motors. Yeah, very interesting. I'll be right back. Basil Chapman, Tiger News Hour. Dow's up 114, giving back a chunk.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, so let me just sum it up in this final segment. Look, Bank of America had a round number 52 when it made the 52.99 all-time high 4 sessions ago. It hasn't been able to break above it, but I'm watching it closely because at some point, if it starts to pull back under 51, that 52 is going to be very important. And I like to look at this as a potential little double top here, just a short-term top, because the weekly is still great, the monthly is still good, and we are long Bank of America from way lower down, right from there, right? So I just wanted to show you, look, the MACD is just turning down, relative strength still good, but turning down. Stochastics turned down, it's under 80% at 72 on balance volumes. Okay, 9-period moving average, fabulous. So a lot has to happen. That's why I'm saying that I believe this is a work in progress, and I'm going to treat it. Oh, let me just go back to GM for a minute. I had a question about. Yeah, GM, I like it very much. I think that at 60 right now, the whole area of 58 is really good support. I like it. I don't know if we're going to go long or anything like that. I should have done it before because I did like it before, but this is one of the better auto companies. All right, let's just do this. Look, the Dow, even with this pullback, look at that. The 9 is still beautiful above the 14. So I think it's a work in progress. It's going to take, maybe it takes another couple of days before we actually start to pull back. But it's a work in progress in the sense that until there's bad news, remember this is the chart that we use for bad news, dark news cloud cover. And until we start to see, INDU, until we start to see the influence of something, I don't know, it could be anything, tariffs, it could be yields, it could be whatever it is, funding, I don't care what it is, until there is a story and the headline just gets bigger and bigger, you don't get your 500-point Dow sell-off, next day another 400, next day. We haven't had that for ages. It'll come, but we haven't seen it yet, and that's what you need for a serious sell-off. So with that, I'm going to say have a wonderful weekend. I'll do my webinar, my video this afternoon for subscribers, an hour or so, and we've got a lot to discuss, what we want to be buying over the next